Hello aspirants and welcome again to Legacy IAS Academy. In this lecture, we will be discussing with respect to an important aspect of GST 2.0. So GST 2.0 has been rolled out, in which there have been considerable changes, a lot of which are very positive and are going to give us certain reliefs. However, there are still certain concerns with respect to the inverted duty structure. So we will see how GST has basically led to ease on the inversion or the inverted duty structure. However, there are still certain concerns with respect to the input and output rates with respect to certain industries. So first we will understand what is inverted duty structure, what it means, what impact it can have, what are the measures that have been taken in GST 2.0 to address that, and what are the areas of concern which still remain with respect to the inverted duty structure. Very important, especially for your prelims. So let's get started with respect to the broad changes that has happened in GST 2.0. So the GST Council basically has moved to a broad two slab structure. Of course, there are other slabs as well, but these are the two broad slabs, means the slabs which covers the majority of the goods and services, that is 5% and 18%. The 12% slab has been done away with. You have majority of the goods and services now in 5 and 18%. Of course, there is another slab of 40%, which earlier was 28% for luxury and sin goods, has now increased to 40% slab. This is what has happened, and of course the removal of the 12% slab has taken place in order to further simplify GST. In addition to this, the input tax at 18% and output tax at 5% still in certain areas remain, which gives us the inverted tax structure or inverted duty structure. So this is what we are going to understand in detail as to what is meant by input being taxed at 18% and output at 5%. What repercussions will it have, and what is exactly the inverted duty structure. So let's move ahead. Before that, an announcement with respect to the new batches that will start at Legacy IAS Academy in a very small batch form of maximum of only 40 students. These are the dates at which the different batches are going to start. Once you enroll with Legacy IAS Academy, there are certain advantages that you will get. Some of them are one-on-one mentorship and doubt clearing sessions with the mentors that you see in front of your screen, and the regular interactions with them. The batch size, as I mentioned, is only of 40 students. There will be daily mains answer writing practice, and of course the test series for both prelims and mains. In addition to this, we have a 360-degree approach to cover current affairs, wherein the entire week's current affairs is covered through the live classes. So this is going to take care all your needs of current affairs. So if you want to enroll with us, you can simply download our app or log on to our website or call the numbers that are listed over here. So let's continue and understand what is this inverted duty structure. In inverted duty structure, what happens is, see, if the process of manufacturing any goods and services is that you will be requiring certain raw materials for that, and then you will process this raw material into the finished good. It's a simplistic process that we are following here. Finished goods will be created. Now when your raw material are taxed at a higher rate, so now we have two slabs, that is 5 and 18%, which are broad slabs. So raw material is taxed at 18% and the finished good is taxed at only 5%. So a situation wherein the raw materials are taxed at a higher rate than the finished good is known as the inverted duty structure, which means the input tax is higher than the output tax. Now what happens is, since 18% of tax was already paid over here, and on the finished goods only 5% of tax were supposed to be paid, even if the finished goods price is slightly higher, 5% on that amount will be way less than 18% that you have already paid on the material, on the raw material. So you will have to file for refunding of those additional taxes that have already been paid, and your money would be stuck at that time, and you will have to claim it. There will be delay, it might be stuck, there can be confusion, there can be issues of rejection of those claims. so on and so forth, as a result of which it puts a burden on the producer. That is the issue that this tax structure still faces. Now an example here is the steel, for example, is taxed at 18%. Now the bicycles that are made out of the same steel is taxed at only 5%. So what will happen is the manufacturer would have already paid a higher tax, and while selling the bike is going to here at bike it's just 5%. So the producer will have to then file for a refund of the additional tax that is already paid. So what will happen is the money of the producer will be stuck with the government. This is the concept of inverted duty structure. Now why it matters? Simply because the refund burden will be there on the exchequer. The government would have received the money but then realized they will have to pay it back. They might have spent it, they might have planned according to that, and now they will have to return it. So that is a burden. The compliance is an issue. There can be delays in the payment of these credits. There can be refusal of that, as a result of which it can nudge the people to evade the taxes altogether because of the risk of not getting the refund or getting the refund at a delayed time. Now also the industry says that the working capital gets blocked. So if let's say in 1 crore in tax is stuck, which is due for let's say refund, basically, or 1 crore which could have been used as a working capital to produce more, to expand, to gain profit, is stuck with the government. So that itself is an issue over here. Now so this is what inverted duty structure is and what issues it is facing. At the same time, there are certain other changes which are certain relief to certain sectors. For example, textile. In textile, there has been GST cuts from 18% to 5% and from 12% to 5%. That means whatever was being taxed, for example, the man-made fiber which was taxed at 18% is down to 5, and the man-made yarn which was taxed at 12% is down to 5. Now same in fertilizer, the inputs such as sulfuric acid, nitric acid, ammonia, all have been cut to 5%. There have been some relief in the agriculture sector as well with respect to tractors, fertilizers, etc. have been addressed. However, there are still certain sectors, as we discussed, who are facing issues, especially with respect to the inverted duty structure. They are the bicycles, the e-bicycles, where the inverted duty structure exists. Even in textiles, wherein the polyester fiber, etc., is taxed at 18%, but the output only at 5%. In fertilizer, also the packaging cost at 18%. Subsidy lowers the output price. So output price of the fertilizer is lower, so the tax on a lower amount will be less. So again, input duty structure kind of an effect it will have. So these are certain areas which probably needs further improvements. We have taken the example of bikes, we have taken the example of fertilizer and various other things. Now what are the risks that are flagged by the industry? So industry has flagged a risk of large amount of fund getting stuck with the government, which blocks the working capital. There can be delay of funds, which will of course encourage tax evasion. Now the solution here can be calling for a narrow input output tax gap to ease cash flow. So the tax gap is going to be high, since it can be 18% and 5%. There's a huge amount of gap. How do we narrow it down is should be looked at as the way forward. One more suggestion here could be, depending upon for what, for example, for steel you have kept 18% as the GST, and on bicycle basically you have 5% of GST. So if the steel is going for the use of the bicycles, etc., can be taxed at a lower rate. Those kind of things can also be looked upon in order to remove this inverted duty structure issue. Thank you.